Good morning, it is Clay Trader. Market opens up right now, so I'm going to try to catch some trades here for you. I will keep you updated. Going for some shares here at 63.70 on Facebook. So let's see if it can get down there or not. Getting closer and closer. Oh, come on. Gave me 20 shares out of 1,000. What a joke. What a joke. And there's a bounce that I wanted. So let's see if it can head back down there again. But 20 shares out of 1,000. You can see it right there. So yes, I'm up 80 cents. Well, like I said, it already made the bounce that I wanted, so probably, but it's hovering up decently around here, but okay, there I'm now all in, and yes, of course, it's down to below it now, which is, like I said, we already saw the bounce I wanted. Probably should have just canceled that order and taken my beating on the commissions on it, because that's what stinks about those partial fills. I mean, I still have to pay commission to buy and then sell it. So, oh well. It's still a decent, a good little entry. I mean, look how overextended this is to the downside. So, we'll see what happens with it. Although I should probably concede since I already did get the bounce. I'll just go for well, we're back above, so nope, back down. So I'll just get rid of them at, well, it looks like I'm going to need to buy some more shares here. So let's try to see where it's going to settle down. Oh, there's a fall. Those are definitely the black boxes there. So I'll pick up some at, see if I can get some at 45 and 42. So there's my 45s. There's my 42s. Now my average is 62.52. Like I said, this is severely overdone to the downside here. So let's see if I can. So let's see if we can get a bigger type bounce here. So there we are, out of that trade for a $140 score. You saw it all go down, got pretty nasty, and yeah, could have. Let's see, I sold. My average was at 52, so I sold for 57, 59, and then 55. So yeah, worked out pretty well. And like I said, my first entry was the stupid 20 share partial fill, but then eventually got in the rest and was able to turn it around. So, that just goes to show, the power of charts, having a plan, and just, not losing your cool, not getting all emotional, and starting to do stupid things. So yeah, let's see if I can catch some more. I should probably be looking to possibly go short here. I am looking to go short here now at 65. Actually, this is getting some strength. I want to move that up to 70. So looking to go short at 63.70. So let's see if it can get up there or not. I'm starting to push through the low 60s here. All right, I will be back if it looks like it's going to get closer up to that 70 mark. Okay, I'm going to try to short 500 shares of Twitter here. You can see we have a bear flag that's formed here. So my thesis going in here, if I can get filled at 42, is that we're going to see a break to the downside of this bear flag. That's what probabilities state looking at the chart and price action here. So I'm going to try to just get a position there, and then I'll let it work for me. If it does break to the downside, if it goes up here, I will simply stop out and take a loss. But in order to minimize my risk as much as possible, I'd like to get in at the 33.42. So let's see if we can get up there. You know, my stop will be up here around, I'll put it at 51. So I will keep you posted, but again, you know, my thesis here, my trade idea going in is we have the bear flag here, and I think it's gonna, you know, if it breaks below these support levels, it should at least go on a temporary, you know, move downwards. So we'll see if that happens or not. I will keep you updated, but that's where things stand, and I'll let you know how this plays out, you know, regardless of not of, you know, if I get filled. So, well, actually, it's getting tested here at the bottom. So let's see what happens. There's the break. So let's see what kind of downwards momentum this pattern break gets to the downside. So I'm going to cancel that because that was, you know, this was the move that I was looking for. So let's see what sort of continuation, if any, it gets to the downside. But, you know, it should drop further given that, you know, this is a bearish pattern that the price is now breaking to the downside of. Well, 25 looks to be a big support. Look at that big old order sitting in there. So if 25 goes, then, you know, this thing should really at least probably go down another nickel. And there it goes. So the fall continues from... So this would have been a very nice trade for me, obviously, had I gotten the shares I wanted. But I didn't. But at least, you know, getting to see a good example of, you know, just a bear pennant, bear flag, whatever you want to call it. Bottom line, psychology being, it was a bearish pattern, and now you're seeing the results of the break to the downside. So I'll keep scoping out the market. Want to try to find a couple more trades here. Just a quick little update on Twitter. If 33.20 here goes, this thing is really gonna continue to take a beating. But 33.20, you can see here with the lows has been holding up, and there it goes. So I'd expect this to trigger some stop losses and get the move down going some more, which you can see is happening, and there it is starting to fall apart again. So again, remember the, you know, oh, that was kind of stupid, and it just continues to fall now. We'll throw in a little educational lesson here, but you can see right there was the bottom of the, well, right around here, bottom of that bull flag, bull pennant that I was talking about. I was trying to short up here, and I just slightly missed it, and now you can see the results of it. Now working on breaking 33.10. So, you know, power of charts, power of chart patterns. You know, that's why I'm a big believer, or that's why I use them, and that's why, you know, I think everybody should use them because they really do work. I mean, you saw me, none of this was camera work or camera tricks or anything like that. I gave you my thesis, what my idea was, but I just didn't get filled. So it is what it is, but you know, really falling apart now. So let's see what. And I was actually, as you can see here, I wanted to short it on this bounce back up here, but it just never got up to the order that I wanted to short at. So yeah, it just didn't work. But goes to show power of charts, power of candlesticks, power of chart patterns. Love it. Okay, I'm going for some shares of SPLK. Well, believe it or not, it was down just in the mid 50s, but now it's all the way back up as high as that. Was going to go for some at 43.50. Looks like it's getting down there some a little bit more. You know, I'm definitely buying into, you know, a downwards move here, but you know, the 5-minute chart is just so brutally overextended that you know, if I need to build a position in it, I should be able to get some sort of snapback. So I'm in now at 43.50, and we'll look to sell at 43.55 for my typical nickel gain. And there I am out for 50. Let's see if I can catch some more here. Okay, looking to get in here at 43.25. So let's see if it can get down there. I mean, this thing is just so brutally beat up. Now it's hovering there, so I'm going to go down to 43.20. it's hovering around too much in this low area here in the low 30s and then high 29. So it's kind of like that's almost like a little micro support level. So if that falls, I want to just give myself a little bit more cushion here. So I will keep you posted. The video's starting out over 10 minutes now, so I'll let you know if I end up getting filled here. Just an update on Twitter. Came back to check it out, and look at this now. Fell apart. Breath. Fell apart again. So darn it. And I'd have been right in this. I'd still be in this, just based off where my stop loss strategy would be. I would still well be within the trade. So let's think about this. And I'll close the video on this. We'll make it a quick little educational lesson. But my risk. I was going to short at 33.42. My risk was at 33.51. So that's a 9-cent risk. I would have lost $5. So that's $45 I was risking. And at this point, I'd be up about 30 cents already on the trade, a little over 30 cents actually. And that's implying with my stop loss. I mean, I could lock in down here and I'd be up about 40 cents on the trade. But the point being, I was willing to risk 9 cents. And now you can see that I'd up worst case at 30 cents. So that's the definition of a good risk versus reward ratio right there. That's what position trading is all about, finding high probable patterns. Yes, a little bit different than the majority of the videos you see, but on setups like this, when I see them, I don't mind just kind of putting an idea like that in place because it really was a favorable risk versus reward, and you've seen it now play out. So just keep your eye open for those. If you can risk 9 cents to get possibly 30 cents or more, that's a nice little risk versus reward setup for you. So if you enjoyed the video, sorry I didn't really catch any more trades, but at least the Facebook one, that was a pretty good one. But if you enjoyed the video, I'd encourage you to go to claytrader.com. I offer many courses, so if you want to learn how to read charts, learn how to trade with charts, learn how to use level 2s, which is what's over here, I teach all that stuff. And it doesn't have to be for strategies like this, meaning day trading. It can be for swing trading or any sort of trading. So go to the blog, check out my courses. Also have a trading group. There's a live chat room. You can hang out with me during the day and other good traders. And all this stuff is very fairly priced. So check it out. But if anything, at least read some testimonials, and that way you can get a good third-party unbiased opinion. So hopefully you learned something, as this was a pretty good educational one, I thought. So thanks for listening, and have a good weekend.